This weekend, gold enthusiast Peter Schiff was mocked all over social media by the crypto community for being locked out of his Bitcoin wallet. While his story may or may not be true, Peter has become a lightning rod for debating the merits of gold versus Bitcoin. While some people still believe in the power of Bitcoin as an electronic cash system, the overwhelming majority of Bitcoin holders or hodlers treat it like gold. So is Bitcoin like gold? Is it a better version, or does it fall short when compared to the precious metal? Today, we're going to be taking a look at how the competition stacks up. Let's get it. Hello and welcome to BitBoy Crypto, your one-stop shop for all things related to Bitcoin and cryptocurrency. I make videos on this channel almost every day. If you like what you hear or see, then make sure to hit that subscribe button and click the bell to turn on notifications. If you'd like to take the conversation further, then please join my Telegram group, the Bit Squad. We would love to see you there. So today, we're going to be taking a look at the comparison between Bitcoin and gold, and we're going to find out which one is better. Many people have compared the two to one another, but how close are they? Throughout this video, I'm going to be grading gold and Bitcoin according to several categories. At the end, we're going to add up the scores and we're going to find out who is the true king of assets. Is it gold or is it Bitcoin? And it might not be what you think, so make sure you stay till the end. So this weekend, infamous gold bug, what a stupid name for a person that likes gold. Infamous gold bug Peter Schiff posted this tweet. It says, "I just lost all of the Bitcoin I have ever owned. My wallet got corrupted and somehow my password is no longer valid. So not only is my Bitcoin intrinsically worthless, it has no market value either. I knew owning Bitcoin was a bad idea. I just never realized it was this bad. All of his Bitcoin was donated from people in the Bitcoin community." Peter has been one of the most vocal dissenters of Bitcoin, claiming that gold is far superior to Bitcoin in every possible way and that Bitcoin is worthless. Due to its critical statements on Bitcoin, the crypto community spent all weekend mocking Peter's lost Bitcoin. Schiff claims to have spoken to Eric Voorhees, who confirmed his Bitcoin was in fact most likely lost for good. Now, we don't know if this was maybe just a big publicity stunt for Peter. Was he just trying to create dissension and get more followers? It is a good tactic on social media. But the question remains, is gold better than Bitcoin? So to answer that question, I've broken down this championship bout into 5 categories. Get ready for a lot of boxing references, people. In each category, I will assign a score of 1 to 5 for performance in each of the 5 categories. So the 5 categories we're going to be looking at today are scarcity, hedging, adoption, divisibility, and last but not least, transactability. So I think these are major categories by which we can grade these assets. So let's kick it off with category 1. Category 1 is scarcity. Scarcity basically means that there's a short supply of something, and in this case, an asset. So in theory, the lower amount of something there is, then the more that thing is worth. So this is why rare baseball cards or unique pieces of art are so valuable. There just aren't many of those. At its heart, scarcity is really all about simple supply and demand. If there is a large supply of something, but no demand, then it's worthless. On the flip side, if there is a low supply of something and high demand, then that thing is going to be worth more. Now, you Bitcoin enthusiasts are going to think that this one is a slam dunk for Bitcoin and that gold cannot compare to its scarcity. But it's actually probably much closer than you would initially think. While we don't know exactly how much gold there is on Earth or even in the universe, the fact is there is a finite supply of gold. If we remove the idea that one day gold could be created in a lab, then there will never be more gold created, at least naturally. But outside of our planet, we do know that there is a huge amount of gold in the universe. We just don't know the exact amount. One day in the distant future, we could find a way to bring that gold to Earth. More on that in a little bit. But if we did that, that would hurt the value of gold. There could also be huge amounts of gold under the ocean floor that one day we could mine. If you compare that to any fiat currency, you will see gold gets high marks for scarcity. Paper fiat money can be printed as long as we have paper. And paper is also an unlimited supply because we can always plant more trees to make more paper. So there is an unlimited potential for the supply of paper money. Compared to the US dollar, gold is extremely rare and ranks high in scarcity. However, when you compare gold to Bitcoin, you will see that it does fall short in this area. By design, Bitcoin has a finite supply built in. The total number of Bitcoin we will ever see is 21 million. We probably won't see it because we'll be dead. As of right now, there are about 18.1 million in supply. But what's funny about that is the number is probably actually much lower. The creator of Bitcoin, Satoshi Nakamoto, has 1 million Bitcoin. Many people assume him dead or that he will never move the Bitcoin that he has. Another possible 3 million Bitcoin have been eliminated from the supply by people who've lost their Bitcoin. Most of these are from early miners who didn't take the precautions to protect their Bitcoin because they didn't think that one day it would be worth nearly what it is now. But at the end of the day, Bitcoin is the only legitimate asset we have ever seen that has a finite amount built into it. This makes Bitcoin the champion of this round. I'm giving gold a score of 3 and Bitcoin a score of 5 for scarcity. And you guys feel free in the comments to let me know what you think of any of my scores and maybe you think that I'm way off. Category 2 is hedging. Hedging is when an investor puts part of their portfolio into an asset that will keep its value even if traditional markets tank. For instance, when the 2008 US recession hit, investors were far better off if they had part of their portfolios in assets not attached to the stock market. Because for the most part, stocks got murdered during this time and people lost huge amounts of money. Hedging an asset is a way to soften the blow the markets may have on a person's wealth when they tank. And trust me, they do tank. Even though we are seeing unprecedented growth in the stock market right now, it will end at some point. Hedging allows investors to be protected. Gold has served as a great hedge against traditional markets for a very long time. You could say that gold is a very safe play for investors. While there's not a lot of huge potential to the upside for a gold investment, at least in the short term, it prevents your net worth from free falling if we do go into another recession. If you look at the gold chart, you will see it was performing best during its last 20 years when the dollar and the markets were crashing in 2008. So you could say that gold needs other assets to depreciate so it can appreciate in value. But the fact is, when it comes to hedging assets, the safer the better. And gold does a great job of that. Now, many people claim that Bitcoin is a great hedge against volatility. We've seen the price of Bitcoin skyrocket during turbulent times in Argentina, Venezuela, Iran, Hong Kong, and much more. So we do have some evidence that Bitcoin will do well as a hedge. However, Bitcoin is an emerging market. It's only been around for 11 years as of right now, but it's only been in the public eye for just a few years. So unfortunately, we just don't have enough data to really determine whether or not Bitcoin will be a good hedge during a worldwide crisis. Personally, I believe that it will, but we just don't have enough history to say for sure, and Bitcoin itself we know is very volatile. So because of these reasons, gold is going to take this round. I'm giving gold a score of 4 and Bitcoin a score of 2 for hedging. Category 3 is adoption. Adoption is basically the amount of people who choose to use or follow something. For something to be successful, a large amount of people have to use it. The internet was technically invented in 1983. However, there was no one using it. The word browser didn't even exist. There were no online retailers, no SEO services, and no, drumroll please, Influencers! When usage began increasing, so did internet revenue. While we think that everyone on Earth is posting on Facegram or Snapbook, only 58% of people worldwide are actually using the internet, so it still has a lot of room to grow. Now, gold has certainly seen a high level of adoption. While you don't see people trading gold bars on the street, gold has been a tradable asset and seen as currency since 700 BC. There were certainly times when gold was the most sought out asset in the world. Entire fleets of ships were dispersed across the world looking for more gold. In fact, gold even backed the US dollar until 1971. The fact that the largest economy in the world backed up its money with gold shows you the power that gold wields when it comes to adoption. Bitcoin, on the other hand, is certainly not seeing the high level of adoption that gold has achieved in its 2,720-year head start. Bitcoin is so new that there's no telling what its adoption level will be like. The good news for Bitcoin, though, is when it comes to adoption, it has passed what is known as the Lindy test. The Lindy test states that an invention that has been used for at least 10 years drastically increases its chance of success over the next 10 years. So the point is, most things fail right away, including businesses, new tech, startups, all kinds of things. But the first step towards adoption for Bitcoin is simply making it. And Bitcoin has managed to withstand things such as government regulation, Mt. Gox collapsing, the Silk Road, and the 2017 bubble. People are also out there building innovative ways to store and use Bitcoin as we speak. At the end of the day, though, gold blows Bitcoin away when it comes to adoption. So for this round, I'm awarding gold a score of 4 and Bitcoin a score of 1. Bitcoin has a long ways to go in the area of adoption. Category 4 is divisibility. This is the amount a certain asset can be divided into. For assets that have high scarcity, it's very important for them to be divisible. This allows more people to be able to own fractions of an asset. This helps with adoption. Now think about this. If there were 21 million Bitcoin in the world, but it could only be divided into whole coins, then only 21 million could own one. That would give the advantage to the first movers only and doesn't support decentralization. It would shut people out down the road when people could not afford entire coins. At $8,500 right now, the price of Bitcoin, most people in the world can only dream of owning one. But when the price was only $11, like when I bought my first Bitcoin, then people in developed countries could have easily owned one, but they missed the opportunity. While gold is certainly divisible, it is not highly divisible. If you're looking to buy gold on an exchange, most of them have minimums that you have to buy, which is in between 10 and 20 ounces. To put that into perspective, an ounce of gold right now is $1,560. So you would have to make a minimum purchase of over $15,000 up to $30,000. But gold is at least partially divisible. It's a soft precious metal, so it can be melted down and divided. You can buy gold in the form of coins and other items which can help someone with a small net worth get started into gold, but it can be difficult when you're trying to get involved. Bitcoin, on the other hand, is incredibly divisible. While the amount of the max supply is 21 million coins, each Bitcoin can be divided into 100 million parts. Right now, that smallest fraction, 1/1,000,000th of a coin, is called a Satoshi after the creator. A single Satoshi is worth fractions of a US penny. As the price of Bitcoin inflates, then the amount per Satoshi will rise. If each Satoshi were to rise to the level of a penny, that would mean the price of Bitcoin would be $1 million. Now, while we're certainly a long way from that, it is exciting to look into the future prospects of Bitcoin. Now, the divisibility of Bitcoin is hugely important because it keeps the barrier of entry for newcomers very low. Many people have never owned Bitcoin because they have the false impression that to buy Bitcoin means they have to buy an entire coin. But they can buy virtually any dollar amount. Someone can get started buying Bitcoin with only a few bucks. So when it comes to divisibility, Bitcoin gives an uppercut. Gold receives a score of 3 while Bitcoin gets a full 5 points. Now, going into the last round, we have Bitcoin at 13 points, while we have gold holding a 1-point lead at 14. So let's find out who's going to bring home the match. Category 5 is transactability, or also known as transferability. How easy can an asset be moved around for transactions? This is very important because if an asset cannot be moved, then its value will be significantly impacted. For instance, earlier I mentioned potential space mining. There's an asteroid floating around the belt of Jupiter that contains around enough gold to give every person on Earth $9 billion worth of gold. Now, that's of course if we ignored supply and demand. However, we have no way to transact that gold. We can't bring it into the supply. Exchanges can't sell it. We know it exists, but we can't use it. This is why transactability is crucial to the success of an asset. It needs to be able to be bought, sold, and traded with ease to really flourish. Now, while gold is pretty easily accessible for the wealthy, unfortunately, it's not super easy to transact with the general public. That's why if you guys watch the news, you guys see commercials on Fox News or CNN about buying gold. Places want to sell you kits that show you how to buy gold. Older generations know they want to hedge assets, but they may not be familiar with buying gold. So third-party companies exist strictly for the purpose of telling someone how to buy it. Does that sound easy to you? If you ask 10 people on the street how to buy gold without allowing them to look it up on the internet, at the most, 1 to 2 people out of 10 would be able to tell you. I would say it would actually be probably much closer to 0. When it comes to actual purchases or retail transactions, no online retailer accepts gold as currency. While sailors in the 1400s certainly transacted with gold, for the most part, people do not do it today. Now, Bitcoin does face a similar problem to gold when it comes to people knowing how to buy Bitcoin. But I would argue that with a quick internet search to find Coinbase or Binance, it's actually much easier to buy Bitcoin than to buy gold. Now, Bitcoin does lose a point here though because of its network congestion. While gold does not have to use a digital network for transactions, Bitcoin does. And even though network solutions such as the Lightning Network or SegWit are being incorporated into Bitcoin to unclog the network, when the amount of transactions are very high, we still don't know how Bitcoin is going to react when the level gets outrageous and we see a lot of increased adoption. But every day we're hearing stories of people sending millions, or in some cases, billions of dollars worth of Bitcoin to someone across the world for less than $100. That speaks to the power of Bitcoin's transactability. Because of this, Bitcoin is going to deliver the final knockout. Bitcoin gets a score of 4 while gold falls behind with a score of 2. So that's it. Bitcoin emerges victorious from this fight by a score of 16 to 17 and a 5th round knockout. But guys, the truth is this is going to be a hotly contested argument for a long time to come. While Bitcoin enthusiasts tout BTC as the new gold and discuss its superiority, gold still has a lot of supporters and a lot of fundamentals that are going to keep it going and keep it in the game. People laugh at space mining. They say it isn't even real, it's a myth. I'll go so far as to say, with space mining, it is only a matter of when, not a matter of if. One day we will have the technology to be able to get gold from all over the galaxy, if not eventually the universe, as long as mankind is still here. For me, the scarcity of Bitcoin is what makes it so special, and that's why I pick to be in Bitcoin's corner. Now, that is my last boxing reference. I hope you guys enjoyed those. And I also hope you guys enjoyed this video. If you did, smash the like button and drop me a comment. If you didn't, then you probably don't like Bitcoin. Have a blessed day. BitBoy out.